Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, August 4th, 2010. Welcome back to me, I guess. Sorry, I've been out on vacation a little bit and haven't had the videos for you, but we're back now and have videos going forward. This morning we're talking about jobs in focus, and this morning the markets are still reeling a bit from yesterday's pullback here in the U.S. stock market. On Monday we had just a huge day higher with risk appetite, which was kind of going through the roof. Yesterday we had a little bit of a pullback. And this morning and for the rest of the week, we're waiting for jobs reports. All right, so this morning the ADP employment change figures came in showing a gain of 42,000 jobs versus an expectation of 33,000. Now, while this doesn't sound like much, the market actually views this as positive, okay, because it shows that we're moving in the right direction. Now, I just want to show you a video here quick. Let's take a look at dollar yen. You can see right when this figure came out, 8.15, we saw a little bit of dollar strength here versus the yen. So that sort of flipped around the risk aversion that we were seeing from the overnight session. As a result of the stock markets pulling back yesterday, we had a big sell-off in the Asian markets overnight, which created yen strength. I'll just show you Aussie. Actually, let's look at Kiwi because Aussie's strong in its own right. But you can see the Kiwi was lower versus the yen, but then it started turning around. Now the Aussie's showing some strength from last night after they had higher home price figures that came in, and they also showed better than expected trade balance figures. They beat by almost 2 times the expectation. So it really shows that the Australian economy is cranking along. Tomorrow they're going to come out with their interest rate policy statement, so that's going to give us an idea of where they are. Just real quick here, pound is down for the first time in let's see, a couple days versus the dollar. Let's see where it is. Well, let's just look at the 4-hour chart. Wow, you can just see nice trend higher. Okay, PMI figures came in the UK, which were a little bit lower than expected, but tomorrow they're going to have their rate policy meeting. While they're expected to keep rates stable and unchanged, okay, they may actually change the language going forward and have to move towards more normalized policy. All right, the home price figures came in the UK, and they came in a little bit higher than expected, which shows signs that inflation may be picking up in the UK. Okay, in the Eurozone, we've also had PMI figures that came in a little bit less than expected, and tomorrow they're going to do their rate policy meeting. I don't think things look as rosy as in the UK, so we're going to have to see what happens there, but expect no change out of the Eurozone as well. All right, now lastly, we've got US dollar. Just flip back to dollar yen here. Okay, you can see the dollar's been weak versus yen as of late. We've gotten down to 85.5 thereabouts. Right, 85 is really that line in the sand, and that's going to be the point where people are going to start talking about Japanese intervention if it occurs. But we've got ADP jobs report today, which came in a little bit better than expected. Tomorrow we get initial jobless claims, and then of course Friday we get non-farm payrolls. That happens on the first Friday of every month, and that's really the granddaddy of all the employment reports. It really shows the best gauge of what's going on with employment here in the U.S. So the market's sort of waiting for that. Now, just yesterday, Tim Geithner came out and he was speaking yesterday in kind of a what I'm calling a CYA move. He mentioned that that jobs may get worse before they get better. Well, we're expecting jobs to get better here. That's what we were told was going to happen because of the stimulus plan that was enacted. And just a report just came out just showing how wasteful and profligate the spending was on the stimulus plan. We're told that if we passed the stimulus plan, that unemployment wouldn't be higher than 8%. Well, here we are. We sit around 9.5%. We're getting reports that a lot of the stimulus money went for wasteful things like testing the effects of cocaine on monkeys. How that's going to employ people, I have absolutely no idea. So that's one of the problems that we've got going on here. Although Geithner yesterday, he wrote an op-ed piece in the New York Times saying, "Welcome to the recovery." Well, if this is the recovery with 9.5% unemployment, I don't know that I want to get better. I may want to stay ill if that's the case. So we're going to have to see what happens with Friday's report as it comes out. But Right now there are a ton of corporations that are sitting there. They have a ton of cash on the sidelines, and they're just kind of waiting it out, waiting to see what's going to happen. You've got a lot of uncertainty going on due to current economic policies. People are afraid of higher taxes, more wasteful spending. They're also afraid of regulation and what this means for their business going forward. Also, the health care bill. I mean, just all these things that are just deemed as anti-business. When people are wondering, well, hey, how come we don't have jobs? The U.S. economy here, consumer spending represents some 2/3 of GDP in this country, and if people don't have jobs, they can't spend. So, that's a big problem going forward. So, this jobs number this week is going to be very important. Hoping that it's going to turn out for the best, and that we're going to see some continued risk appetite. But, Geithner may have tried to let a little bit of air out of the exuberance, so to speak, prior to the numbers. So we'll have to see what happens. So that's what we're looking at this morning. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.